often is that from your very first paycheck, you need to start saving 10% into something that's long term. So that they would have a comfortable retirement, and in the same time be paying a little bit less in taxes, and then along with the remote savings for your retirement. At the beginning of the year, start some type of remote savings for those wish list kinds of vacations, doing longer term planning for those types of things. Because he felt that he really would have had more money for retirement if he had spent less on the family vacations.
So he's suggesting less or no big extravagant vacations, but maybe fewer smaller ones.
Right. Yeah. And then, really added on to that, and you have to start saving 10% into your retirement accounts because a lot of people will do like only to the match, and then that's about it.
Yeah.
And then the second point that, we're all realizing a lot every single day is that everything's more expensive.
No kidding. No kidding.
I have a client who was shopping for a car this past week, and I think she was a little bit shocked at what the prices are.
New car, used car?
Well, I always have in the past, up until this last car purchase, have bought cars that other people have leased and returned because they're generally low mileage, they're well maintained, but they're sold as used cars. So it's a really great quality used vehicle, so you're not paying as much. But we've seen over the last couple of years that the prices of used cars are really, really close to the price of new cars.
Crazy.
So you're almost splitting hairs. So
she looking for a new car or used car?
Well, she was looking used originally, but she found a car that she liked that was a 24 new. And because it was a year-old model, they were willing to give her a break on the price. So, and then I've also... If somebody's paying cash for a car versus financing, when you go in to buy a car, which I did a year and a half ago, they want to talk to you a lot about the financing because, of course, the dealerships make a little bit more money from that end. So it was interesting to talk pricing to the car and of the purchase with the dealer, and then end up saying, okay, so what's the cash price? And you see their faces drop. But again, as my client said, with the prices of everything going up so much, when you have to make these big ticket item purchases, if you can pay cash, you're going to be in a much better situation. You're not going to be financing something. You're not going to be paying interest rates for God knows how many years, which is all going to add on to the price of the item that you're purchasing. So the initial cost is more expensive, and then paying finances charges makes it even more so.
As crazy as it may sound, I bought my last 3 cars online. Never walked in the dealership, never talked to a salesperson. But because of the ability to shop around the country, you can shop what you're looking for, and then you can get dealers pitting themselves on price against price. And oftentimes, I found some very, very attractive purchases. But so today with the internet, it's another way to buy a car. Have you ever looked at those car buying services where somebody will go out and haggle for you?
No, I haven't. But the last car that my husband got rid of, he sold to Carvana. And it was really easy. They looked up his car, they quoted him a price. It was way more than he was getting for trade-in value. But my next door neighbor was telling me yesterday that their son bought a car from a service like that. Just picked out a car, they negotiated the price, delivered it to their house, and that was it.
About a year ago, I had one of our longstanding clients. She's now well into her 80s, no longer driving anymore, no longer needing the car, but she wanted to sell it. And she lived up in Claremont, up in that area. And she didn't want to go to the dealership and do all that stuff. And I recommended, let's see what Carvana will pay for it. And son of a gun, it was a very, very competitive price. They came out, looked at the car, gave her a check on the spot, and she was happy as a clam. So that is a way to get rid of a car. And of course, take it to CarMax, see what they'll offer you there. But it's an easy way to get rid of a car.
Yeah.
Yep.
So anyways, it worked. But, having to deal with prices, you have to look at a lot more than just the initial purchase price of something. What ancillary costs are going to go along with that. And then his third point, which is a topic I've discussed ad nauseum with my clients this week, are taxes. Generally go up. There's been a few times in our lifetimes where there's been some reductions in taxes, but generally they go up. I had a couple in this week that we were trying to figure out what might be the best way for them to take withdrawals once they hit retirement. You know, they had the fixed items. One of them was lucky enough to have a pension, and then they both have decent Social Securities. But then where do they take money from? Do they take money from their non-retirement accounts and we try and match up some gains and losses? You know, capital gains are taxed generally at a lower rate than ordinary income is. Do they pull money out of the Roth account because it's all tax-free? But I don't know next year when they are both retired what the tax laws are going to be. And it's the biggest unknown that we have to deal with. And it is so frustrating because you try and do some planning and then right in the middle of everything can go sideways as far as taxes go.
Well, we've seen that before. But it's all part of planning. And the beauty
Well,
of
it is.
But the beauty of, as you know, what we do is we have the ability to then make changes on the fly. When there's new tax laws come out, bingo, we've got the information. You plug in the numbers and see what's going to happen. But unfortunately, we can't predict what's going to happen for 2026. It looks promising, though, that the original Trump tax cuts will remain.
Will be extended, which would be nice. So, you know, and I like to meet with my clients at least every 6 months for a review and updates, and it keeps me up to date on these types of events that are going on in people's lives. And then if there are major changes to tax laws or how much you can contribute or no longer contribute to your retirement accounts and all these types of things. So we're really keeping as much up to date as possible with what's going on in their lives and what's going on in the financial world.
Yep. Things are always changing. I see we're getting close to a break there. Greg, you want to take it away?
You got it. And if you've received some sage advice that maybe you'd like to have our financial experts sit and evaluate for you, or you have any other questions, please just give us a call in at 844-580-9326. Again, 844-580-WDBO, or use that open mic feature inside the WDBO app. You've been listening to On the Money, where we're planning tomorrow
Today
with the Certified Financial Group.
He or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in, you say, hey, Lou, I need to, I'm barbecuing this weekend, right? What do you like? And Lou goes to, the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal, oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak, just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit, it's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
Welcome back to On the Money here on WDBO 107.3 FM and AM 580. You can also listen live on the WDBO app wherever you happen to be. Today, we have Nancy Hecht and Joe Bert from the Certified Financial Group. If you have any questions about your finances, go ahead and give us a call here at 844-580-9326, or you can utilize the open mic feature inside the WDBO app. Also, don't forget Charles Curry is taking your calls off air if you wanted a more private conversation. We got 407-869-9800. Now back to our hosts, Joe and Nancy today.
Yeah, I saw we had a text question float in there. Greg, you want to take it away?
It's been buzzing off the hook over on this side, so we do have one. It's first question up. We have, what is your process for managing risk inside of an investment portfolio? That's coming from Richard out in Lake Mary.
All right.
So there's a few different things that we do to help with managing risk. The first thing that we do is we have a risk assessment questionnaire that we have everybody take. And I don't want that to be scary to people. It's a very simple quiz. It's, I think, maybe 10 questions, and some of them have pictures with the questions, so it's very easy to take. And this gives us an idea of the mix that we should maintain your portfolios at between equities, the stock-based investments, and income, which would be bonds or money market types of accounts. And then every single quarter, when we're doing our quarterly reviews, we're doing an analysis to see, because of growth or shrinkage in the markets, what has happened to the balance between the equities and the incomes. And do things need to be reallocated to get yourself back into that portfolio mix that is a lot more desirable with your types of investments. And then also looking at a lot of what we're doing this time of year is maybe some tax loss harvesting, which is looking at items that have grown in value and trying to match them up with some items that have not grown in value. So maybe you can take some equities off the table and not have it be taxable and then rebalance your portfolio. So those are just a few things that we do to help maintain risk and balance in our clients' portfolios.
Now, you mentioned the questionnaire that we use. Although we call it a risk tolerance questionnaire, it's really an indication of volatility, how high it can go, how low it can go, what the swings might be based on how you answer those specific questions. And it's interesting, as you know, when you do those quizzes or questionnaires, people are sometimes surprised. Either they scored higher than what they thought they would be, or they scored lower than they thought they would be.
Yeah.
And of course, the important thing for us as certified financial planners is to find the right mix to be sure that you're getting growth on your money and you'll have income for the future. So if you're scoring, you want to be really aggressive. And we find out when we've done the planning, you don't need to be trying to hit home runs. Just a single and double player will get you where you want to go on one side, and then the other side, if you score very conservatively, if you don't want any volatility at all, and you plug in that number, you'll find out you'll be broke when you're 82 years old. So starting with that risk tolerance or volatility observation is a great starting point. But then that leads to discussion as to really what you need to do, and of course that's a guideline for us. So hope that answers a question from our caller in Lake Mary, and I see we've got a call on the phone there. Greg, you want to tee it up?
We do. We've got Al who's calling in from Orlando. Al, you're on with the Certified Financial Group.
Morning, Al. What's up?
Hey, not much. My wife's getting ready to retire, and if she collects Social Security now, she gets $2,891 a month at age 64.
Mm-hmm.
And it's to go to age 70, she would earn $208,151 in payments.
Mm-hmm.
But if she waited till age 70, she'd get $45.48 a month,
Right.
and a total of $54,576
Right.
a year, which she would have to live to age 74 to equal what she would get if she started collecting it now and putting it away.
And your question is?
When should she take it?
Well, we'll answer that after the break.
Yeah.
So stay tuned now.
Yeah, stay tuned, Al. We'll have that for you here coming up right after the break. You're listening to On the Money, where we're planning tomorrow
Today
with the Certified Financial Group.
Frank, and there's Stevie, and there's Mikey, and these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I need to, I'm barbecuing. Ever learn.
For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're a certified financial group, but we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to the Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town. I've sent several of my teacher friends here.
We're a certified financial group, but we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, but we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, but we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investors.
Here on WDB FM and AM 580. You can also listen live on the WDBO app anywhere you are. Today, we have Nancy Hecht and Joe Bert from the Certified Financial Group. And if you have any questions about your finances, just go ahead and give us a call here at 844-580-9326. That's 844-580-WDBO. Or you can use the open mic feature inside the WDBO app. And don't forget Charles Curry, who's taking your calls off air. You can reach him at 407-869-9800. Now back to our hosts, Joe and Nancy, and we're going to bring Al back in, who was just asking his questions about Social Security before we
Hi.
get the break.
Hi, Al.
Now, let's tee it up again for our listeners who may have just joined. So let's get back to your question.
Okay, my wife is just turning 64.
Mm-hmm.
If she collects Social Security now, for a year, she'll make $35,000 in Social Security.
Mhm.
If she waits till age 70, she'll get 54,000, almost 55,000.
Okay.
But if she collects it now, for those 6 years she'd have to wait. She would have to live another 4 years past age 70
Uh-huh.
to catch up to what she would get if she started collecting it now.
Okay.
Okay.
All right. So I have some very definite opinions on Social Security claiming. So I'm not a fan of claiming prior to full retirement age. And I'm guessing that 67 is probably full retirement age for your wife because you are taking that permanent cut. And then you're saying on the flip side, waiting to age 70, she has to live to age 74 to be able to make up the difference. Well, that's really not that much. And statistically, she's going to live way beyond age 74. And I really don't know any place else where you're going to, if you delay taking a benefit, you're going to get a automatic 8% increase in what you're receiving. But more important than that is...
What's that, Al?
I was going to say, in your statistics, how many people don't live to age 75 or 80?
More than you think.
Yeah,
A
yeah,
lot more than you think.
yeah,
A lot of
yeah,
people don't make it there.
yeah.
Okay.
But more important than that is how important is her Social Security to maintaining a comfortable and desirable, carefree retirement lifestyle for the both of you.
Well, we don't even need it.
Okay.
Well,
Well,
yeah,
then
that answers that question.
then that
You can
begs
certainly
waiting
save
to
it.
age 70. If the government is going to gift you 8% a year for delaying up to age 70, why not take that gift?
But I think if we take the money
Hmm.
and maybe invest it in something Joe has, we can do better than 8%.
Well, I like the guarantee, Al. There's no guarantees in what we do. We try to do our best to get reasonable rates of return with minimal risk, but the government's got a guarantee there for you. And you may be sitting out there, and listeners may be thinking out there, well, Social Security may not be there. I can tell you at our age, they're not going to change the rules. They're going to change it for the kids that are 25 years old today.
Right.
So I have no fear of that. But the other thing I would say, and this is for all of our listeners, when you're making that decision about deferring, you also want to look at your health. If your health has changed, you've deteriorated, get in line and get that money now. But if you're in reasonably good health and expect to live well into your 80s, as Nancy said, if you don't need the money, you're far better off letting it compound and grow. The drawback is, of course, you don't get to spend that money today. But as Nancy asked you, if you can maintain your lifestyle and do what you want to do without without messing up that guarantee, I definitely wouldn't do it. But once again, what you want to do is look at your plan. Want to be sure that if you take it now, you don't blow things up. And then you can also look at the advantage of waiting till 70. I understand what you're saying. The bird in the hand, you don't get the money today and spend it today. But Nancy and I both like to be sure that when you go into retirement, whether it's pension or Social Security, we've got some guarantees.
And we can do Social Security analysis for people,
Yep.
to see what might be the best claiming strategy for each particular person. But it's a good question, Alan. It's one that's on a lot of people's minds. Thank
All right,
you.
thank you very much.
Thanks, Al. Thanks for the call. Okay, we've got another call I see there. Greg?
We do. We've got Rich out in Flagler Beach. Rich, you are on with the Certified Financial Group.
Good morning, Rich.
What can we do for you?
What's up?
Good morning. My question is, when we hear analysts talk about a stock and they say they're projecting the price to be $50 a share,
Hmm.
but they never give a time frame.
Because it's a prediction.
Yeah, and a crystal ball, and let's like go to the carnival. It's my fortune.
Yeah. What is a typical time frame?
There is none.
Yeah, it is a prediction, and that's about it. Their estimates are based on sales and revenue and expenses that they expect to hit, XYZ price for the stock. However, as you glaringly pointed out, they don't say when.
And there is no guarantee either, because a lot of things can change. The economy changes, the industry changes, things that they thought they knew about the company that weren't there. So even though they may claim that I guarantee you that not most of the time, but at least half the time they're wrong. So, it's fun to watch, the shows. I watch them myself, but I can tell you I don't make any bets based on what the analysts say.
And if you are an investor versus a trader and it's a company that you like and is solid and maybe you spend money with and you want to own a little bit of the stock, then buy some.
No, I agree. If what they say makes sense with a particular company, and you agree with it, then go ahead and dip your toe, as they say.
Sure.
Yes.
Sure.
Yeah.
Sure.
And then
Okay.
one thing you can look at on the backside as far as selling is there's something called a stop loss, that if a stock is very volatile, you could put a particular price or percentage that when the stock hits that marker, it will sell. And you
Sure.
you can manage the downside. So, but again, we like to invest, we don't like to trade. So
But more importantly,
Right.
we like to tell our listeners, really, most people don't have, you need to have three things to be a long-term successful investor in the market. You need time. You need time to be able to analyze all of the information that's available on the company. It's what we call due diligence. You need the time to be able to do that. You need the temperament. You need the temperament to stick with your convictions even when things turn against you. And then you need the talent to be able to analyze all the data that you're looking at. And most people have one, maybe two. Very, very few people have all three to be successful. And that's why we use, our rule of thumb is we use professional managers that have the time, the temperament, and the talent, and the millions, tens of millions of dollars to do the analysis to find those particular investments that we provide to our clients using no-load mutual funds and ETFs. That's what it's all about. There's nothing wrong with picking individual stocks, but you have to remember, as Nancy said, there's a difference between speculating and investing and I should say, speculating and investing.
yeah, it's a matter of, and we've said this ad nauseum also, time in the market, not timing the market.
Right.
So, anyways,
Exactly.
we hope
Okay.
that helped you.
It did. Thank you very much.
You're welcome, Rich. Thanks for the
Have
call.
a nice weekend.
And I see we have another text question float in there, Josh.
I'll let
Josh,
Josh,
Josh.
I'll let Josh know that he
Oh,
heard
yeah.
this message.
Old habits are hard to break,
No,
Greg.
you're fine. You're absolutely fine. I do have a couple more here, and actually,
Okay.
we've got Annalise out of DeBerry who put in a question about how can I protect my income and assets in case of an emergency or unexpected event?
Well, having an emergency fund is something that is extremely important. And I call it toe the sock money. It's money that's put aside in case, somebody gets into an accident, your, water heater dies, you have to replace your roof because of something that has happened. Those types of emergencies. So it's money that's in checking, savings, money markets, and you're only going to touch it for those types of things. If some huge emergency comes up and it's larger than what you have set aside for your emergency fund, what you have to then start looking at is, do you have taxable investments? Do you have tax deferred investments? Which is going to hurt the least to go into to get you some cash to help pay for whatever that emergency might be. So, you have anything to add to that?
No, that about sums it up. You need to know where to take the money from on a
Yeah.
tax-favored basis.
And my clients are like all over the board when it comes to emergency funds. I mean, some people are happy with having $10,000 in an emergency fund, and some people want like $150,000. So it's not something that I can say you need to have X number of dollars. I think that is definitely a personal preference.
Mm-hmm. Mm-hmm.
So.
One of the things that we do for our clients, though, is set up a line of credit. It allows you to, and I'm not talking about buying your investments on margin, but knowing that if you need to write that big check for $10,000, $20,000, $30,000, you're able to do it on a heartbeat and not disturb your savings and investments. But I agree with you 100%. You need to have some liquid money for when you need the tires, the roof blows off, or the hot water heater blows up.
Mm-hmm.
So, yep, I agree with you. Got another text question there, Greg?
We do. I've got another one that popped up, and this one's a little bit of a loaded question, so I'll be interested to see how you guys answer
Okay.
this one.
Okay.
It's Barry out of St. Pete, and he's wondering how he can effectively save for retirement and how much he should be saving. I know a lot of that depends on a financial situation and age and all these different factors,
Mhm.
but what's the most general advice that you could give somebody for that?
Well, again, as I had said when we were talking in the very beginning with my client in a sage advice, saving from your very first paycheck. I mean, and if you can get used to saving from the very first paycheck when you're, have the job when you're like 16 or something, that's a good idea too. A lot of people will save to their corporate match and that's it. And I always tell people to look at the corporate match as gravy. Again, I think 10% or more, if you can do that comfortably, is a good way to save for your retirement. And make sure that, what was the other thing? Effectively save for your retirement. And then, if you're saving on the traditional side versus the raw side, and a lot of companies offer both, you're not spending dollars that weren't being spent originally, because instead of paying money in federal income taxes, you're paying money into your retirement account. And then also, every time somebody gets a raise, I recommend that they take part of the raise and increase what they're saving into their payroll deducted retirement savings.
Yeah.
I mean, it's such an easy tool for people to be able to use. And it's, as soon as you start a job, you get signed up. I think something that's important also is make sure that you're looking at what different investment choices there are in your company's 401k. If you don't make a choice, you're generally dumped into one of the target retirement plans. And those are not as actively managed as some of the mutual funds that are available. And I prefer an actively managed fund versus something that's a target date fund that's just going to, slowly ratchet around more into income and less out of equity as the years pass on.
Yeah. Well, the important thing is as Nancy said, is to save early on and use the tax favored way to do that. That's using your IRA, your 401k, your 403b, your 457. Put 10% of your paycheck in there and don't look back. And the most important thing for young people is to stay out of credit card debt, because once you get on that slippery slope, before you know it, you're struggling to make those credit card payments, and that's all you're thinking about. You cut back on your 401k because you're going to make the payment. And just learn to live on what you're bringing in after you've saved for some emergency money and some money into your retirement account, then blow the rest. But that's what you need to do.
Something that's encouraging that I've heard on the news in the last couple of days is that more people have actual emergency savings than credit card debt.
That is
for
encouraging.
The first time in
that is encouraging.
who knows how long.
Yeah,
so.
I think maybe because they're seeing their parents struggle.
That's very possible.
For sure. All right, Greg, take it away.
And you've been listening here on the from the Certified Financial Experts of the Certified Financial Group. If you have any questions that you'd like to ask, go ahead and give us a call, 844-580-9326, or you can use the open mic inside the WDBO app. You've been listening to On the Money, where we're planning tomorrow
Today
with the Certified Financial Group.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I need to, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, you know, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
40 years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have. That's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, or we're planning tomorrow. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town. I've sent several of my teacher friends here.
We're Certified Financial Group, where we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, where we're planning tomorrow, today. Black.
Welcome back to On the Money here on WDBO 107.3 FM and AM 580. You can also listen live on the WDBO app wherever you are. Today we have Nancy Hecht and Joe Bert from the Certified Financial Group. If you have any questions about your finances, you can give us a call, 844-580-9326. Though you might want to save that for next week. But you can call Charles Curry, who's available off air at 407-869-9800. And now back to Joe and Nancy.
So we have a number of upcoming workshops and events that I would like to let our listeners know about. On March 8th from 10 a.m. to noon, how tax planning changes through 4 stages of retirement. This is live at Village on the Green. It's hosted by Gary Abley. The second one that we have coming up is March 19th. This is an evening event from 6:30 to 8, Social Security Planning, Basic Rules and Claiming Strategies. This is hosted by Charles Curry. And then on March 29th from 10 a.m. to 11:30 in the morning, the Smart Retirement Blueprint from Paycheck to Paycheck, Planning, Protecting, and Preserving Wealth. This is hosted by Dave Balakrishnan and Rodney Ownby. And then our annual Shred event is coming up April 26th. So make sure that you start preparing yourself for that. This is running from 9 a.m. until noon. It's open for clients prior to 9 o'clock. Everybody who wants to shred stuff can bring 2 boxes or bags of their documentation. You'll drive around our offices. There's a big shred truck. You can see your stuff going in there and getting shredded on the site. We're going to be doing the radio show for a couple hours live. We'll have some snacks. And it's a great way to get rid of some of the stuff that you've been hanging on to and you don't really need, and it's been taking up space.
Getting back to the workshop that Angie just mentioned, 2 weeks from today at Village on the Green. If you come by at 9 o'clock, you can be part of our studio audience. We'll be broadcasting at 9 o'clock from Village on the Green. At 10 o'clock, Gary will be doing the retirement planning through the 4 stages of retirement. That workshop will be from 10 to 11:30, and then stick around and have lunch on me. So we look forward to seeing you there. For more information, you need to go to our website. That's financialgroup.com. financialgroup.com. All of our workshops, of course, are complimentary, and the reason we do it is to, number one, to hopefully prevent you from becoming a financial casualty, and secondly, to introduce you to what we do as certified financial planners, providing retirement planning, investment management for a fee, as we have been doing now for going on 50 years. So if you want more information about what Nancy and I and the 14 other certified financial planners do, go to our website. That's financialgroup.com. And we hope to see you there. And don't forget that Shred event coming up on April the 26th. It's a great event right here at our offices in Altamont Springs. More information to come, but as you're going through tax time there, put that stuff in the banker's box. As Nancy said, a limit of 2 per car. We've had people show up. Remember one year, Nancy?
With lots and lots of stuff.
Remember the guy that showed up in the van?
Yeah. So,
A whole van.
No, whole van.
you know, but if he had like 5 people, you know, the 10 boxes would have been okay. However,
it was a dentist who was closing his practice and getting rid of his records. So he brought him to us for the Shred event, and his whole van was filled up, and he kind of abused the situation. So anyway, that's Tales from Certified Financial Group.
For more information, please go to financialgroup.com.
You've been listening to On the Money, where we're planning tomorrow